How's everyone doing today? Shankar Puri here. Today we're going to take a look at the Bitcoin price and see where we're headed. So let's dive right into the charts. Alright guys, so let's look at this Bitcoin chart here, right? So we have a couple important things to talk about today. We're going to talk about the S&P 500 and as well as this Bitcoin chart. So this Bitcoin chart here, we had a nice pump today, but it's been rejected. So we've got rejected off of this trend line here. And if you remember, we've been talking about this trend line all the way back here and how it was formed in 2021 and how it acts as support and resistance. But mainly it's been acting as a resistance so far for the Bitcoin price. So we've literally been just every time we touch this, we broke out once, but ever since then we've just been rejected. We had a fake out here and we've been rejected. So this is a very important trend line to get over. We do currently have on the daily a bullish divergence right here. So we do currently have a bullish divergence, as well is that, you know, we could definitely tomorrow head higher. But the thing is, what I really want to point your attention to is the SPX, so the S&P 500. So the S&P 500 today, this morning, it looked like we were gonna start, continuing up, and continue this swing up and have inverse head and shoulders. But what we can see here is we do have the 200-day moving average. We actually got rejected right on the 200-day moving average. Now this is a red flag. If we don't come over the 200-day moving average, it can be potentially a red flag. We're not 100%, a red flag yet. We're also coming down to test this bull flag, so the trend line of this bull flag. So it's not 100% that, we've used it as resistance. We could simply be coming down to retest this bull flag and head higher. But I just want to point your attention to the significance of getting rejected off the 200-day moving average. So the significance is anytime we've gotten rejected off the 200-day moving average. So if you look here, we tried to get over it in 2018, and then had a crash, right? If we look over here, we tried to get over it and had a crash again, 2015, right? And that was about 12%. And then if we look over here as well, so let's look further back. So anytime we've gone rejected, we've had a crash underneath it, right? So just want to bring your attention to that. So anytime we really use it as resistance, over here when we had the 2007 crash, it was used as resistance. We came further lower, got rejected, and continued our way down. So this is just, for us to see that there is an importance of the 200-day moving average. Now, we are not anticipating, and I'm not anticipating that we're going to get rejected, continue seeing a rejection off the 200-day, because we also remember that we did have the yield invert. So let's look over here. I'll bring up this chart. So mind you, so the yield inverted, we did have a bit of a dump, and then we had the peak of the market. So currently, so the yield inverted, there was about a 4% dump or correction, whatever you like to call it, and then we rallied about 17%, right? So even over here, the yields inverted, we ran up, had a decline of 7%, and then hit the peak, right? So currently, every single time the yield has inverted, we have had a nice price increase. So we did have the yield invert here for, I think it was 36 hours. The yield still did invert, so we're gonna count it. and we are anticipating a price increase. So we have decreased about 3%. Again, we can still go lower into this zone here, so we're not going to rule that out. What was just concerning was that on the 200-day moving average, we got rejected right on the 200-day moving average. So that was something that, for us to pay attention to and is important, right? So yeah, so that's what I wanted to talk about. The S&P 500, the reason why we look at it is because it is very correlated to Bitcoin, right? So for individuals who say that the markets aren't correlated, crypto and stocks isn't, that's incorrect. So that's why we do look at Bitcoin and the S&P 500. So let's look over here on the daily time frame at the USDT, not the USDT. Let's look at the Bitcoin dominance. So right now, the Bitcoin dominance is showing a bearish divergence, and this is a hidden bearish divergence. So we're anticipating lower lows, but this is proving to be a really strong support zone. So the price, once we break underneath the support zone, alts will start doing really well. But we've just, for trading, it's been, pretty choppy, and you really had to be precise and keep your stop losses, really manage your risks these last couple weeks. So we are anticipating, again, we could go all the way up here where this is the resistance zone and we've gotten rejected, and head lower, but we are anticipating sooner than later that we continue lower and trend lower. So we are looking for the dominance to get down here and then break lower, right? So that's what we are anticipating and looking out for. Once that does happen, altcoins will definitely have, a great run. And you can see we're underneath the 200-day moving average. So as long as we're as well underneath the 200-day, that is, pretty bearish for the price action. Okay. So let's look at USDT. So the USDT dominance. So the USDT dominance still trending lower. We're still looking for it to roll over, break down here, and continue lower. So that's really what we're looking for. We're looking for it to come down to these levels right here. And if that does happen, that will be definitely amazing for Bitcoin and the altcoins. So just to keep an eye out on that. And let's zoom in on it and see how the structure is looking on the 1 hour time frame. So we do have some support zones, and I just want you guys to see these support zones, these lines, they actually do hold some weight and some meaning, because we've drawn these support zones way before the price even came down here. And you can see how it reversed, and we did in our video say that we could break down from here, or from this trend line, or from here, right? So we're just anticipating the moves of the market. We can't really predict anything, but we have gone up to here, and we're looking for the price to start descending down. And now remember that we have support zones here, and they're they're not as strong, these support zones, those ones, but once we come lower, and this is a hidden bearish divergence that we have here. So we're anticipating lower prices on this chart as well. As we come lower, once we break this zone and come down here, then we will, have altcoins as well, and Bitcoin especially, do a lot better, right? So just to remind you guys, the inverse correlation between these two, right? So you can see how, here, let me, so you can see the inverse correlation between these two, and how that whenever just go back here. Okay. Sorry about that. So yeah, so whenever Bitcoin, especially in this cycle, so let's take this cycle for instance. Okay, that's good. As Bitcoin, the altcoin USDT dominance reached the peak, the Bitcoin price reached the bottom. And as it came down to here, the Bitcoin price reached the peak, right? So this is something that you want to pay attention to. You see, we had a bottom here, a peak of the USDT dominance, and you'll keep seeing that, right? So as the price of Bitcoin goes up, the USDT dominance goes down, right? So USDT dominance goes down, Bitcoin price rallies up, right? So this is very important to watch, and we have been watching it on this channel. It has been helping us by seeing the divergences or patterns play out. It really does help and give us a gauge of where we can see the Bitcoin price going. So let's look at the total 3, which is the altcoin dominance, and you can see nothing much has changed. We still have this bullish divergence, and we have these support zones here. So you can see that, you know, we've held this support and we're looking to move to this resistance. So we're looking to break through this resistance, hold that support, and just keep moving up from zone to zone. All right, so that's really what we're looking at right now. So yeah, so that's really it for the price. The most important thing is that, you know, the SPX, S&P 500, we can see a rally over the 200-day moving average, and continue. We're looking at this inverse head and shoulders. There's a pretty big inverse head and shoulders, with the neckline being this yellow line, which is a big point of resistance. So if we took it from, so how we measured, so let's say we take it from there. So targets could be, you know, just under 5,000 for the S&P 500, right? And that would be a move of about 13%, you know, so we can see a rally that high, you know, could be a possibility, and that may be to blow off the top, right? That could be the top, who knows? But, you know, anything can happen in the market, so just you trade responsibly, use your risk, and you know, have your conviction and keep your conviction. Not a financial advisor, and please tune in next time for another video about the Bitcoin price and the charts. Thank you so much.